Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 6th of June. Soft US jobs data cast doubts on summer hikes. The US dollar collapsed on Friday after the US employment report for May disappointed investors who were looking for strong data to support a near-term rate hike by the Fed. Non-farm payrolls rose by a mere 38K, while April's number was revised down to 123K from 160K. Friday's report marked the slowest pace in jobs growth since September 2010, at a time when the market was expecting a decent 164K increase. The unemployment rate declined to 4.7% from 5% in April, but not for economically healthy reasons, as the labor force participation fell for a second consecutive month. We believe that this report adds to evidence that the FOMC members are likely to keep their fingers off the hiking trigger for a while. In our view, Friday's report, combined with the uncertainty surrounding the Brexit referendum, take a June action completely off the table. What's more, we believe that the market is still too optimistic about the prospect of a July action. The FOMC is unlikely to rush into the next hike without feeling confident that this setback in the labor market was only temporary. While the implied probability for June collapsed to below 5% in the aftermath of the jobs report, and potential July action still carries approximately 30% probability. In our opinion, this probability could gradually ease as July draws closer, unless US economic data show dramatic improvement going forward. Our base case scenario remains that the Fed is likely to wait at least until September to take action. The focus now turns to a speech by Fed Chair Yellen today before the World Affairs Council of Philadelphia, where she's expected to speak about global conditions. Given that Yellen already expressed her view on future Fed fund increases a couple of weeks ago, we don't expect any significant deviation today. She is most likely going to reiterate that rate lifts may be warranted in the near future, depending on the quality of incoming data. However, it would be interesting to see whether the Fed chair comments on Friday's bleak jobs report and whether this could make the committee hesitant with regards to a summer action. Something like that could cause the dollar to extend its Friday tumble. Besides Fed Chair Yellen, ECB Vice President Vitor Constancio speaks today as well. As for the rest of the week, on Tuesday all eyes will be on the RBA monetary policy meeting, where officials are expected to remain on hold. Nevertheless, we believe that the nation's soft inflation outlook may warrant further easing in the not-too-distant future, so this could lead the officials to reintroduce an easing bias in the policy statement accompanying the decision. On Wednesday, we get China's trade balance for May. On Thursday, the highlight will be the RBNZ monetary policy meeting, where the bank is expected to stand pat and perhaps reiterate a strong easing bias in the meeting statement. From China, we get the CPI and PPI for May. Finally, on Friday, we get Canada's employment report for May. The unemployment rate is expected to remain unchanged, but we see some upside risks to that forecast. Even though oil prices continued rising in May, we believe that the devastating wildfires in Alberta may have left their marks on the nation's labor market. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.